5 best ETFs for a 4% dividend yield. First up is the Vanguard High Dividend Yield ETF, DEM, which has a current yield of about 3.2%. This ETF tracks the FTSE High Dividend Yield Index and focuses on large-cap U.S. companies with above-average dividend yields. The top holdings are Johnson & Johnson, JPMorgan Chase, and Procter & Gamble. Why is it safe? Because it's tracking an index that is diversified across sectors with stable blue-chip stocks. Next up is the Schwab U.S. Dividend Equity ETF, SCHD, with a current yield of about 3.5%. This ETF focuses on high-quality companies with a strong history of dividend growth. The top holdings are Broadcom, PepsiCo, and Coca-Cola. This ETF focuses on U.S. companies with a history of making consistent dividend payments. The top holdings are Altria, Dominion Energy, and ONEOK. Why is it safe? Because it emphasizes stability and includes utilities and consumer defensive sectors. Why is it safe? Because it screens for financial strength, high return on equity, and consistent dividends. This ETF focuses on companies that have increased their dividends for at least 20 consecutive years. The top holdings are 3M, Chevron, and AT&T. Why is it safe? Because it targets dividend aristocrats in the S&P Composite 1500. Third is the iShares Select Dividend ETF, DVY, with a current yield of about 3.8%. This ETF focuses on high-quality U.S. companies with above-average dividend yields. The top holdings are ExxonMobil, Verizon, and Chevron. Why is it safe? Because its quality screen filters out risky high-yielders, and the energy and telecom sectors are less volatile. Next up is the SPDR S&P Dividend ETF, SDY, with a current yield of about 3.4%. And last but not least is the iShares Core High Dividend ETF, HDV, with a current yield of about 4.0%.